At the end of this webinar, I aim to empower you to buy dividend stocks at reasonable prices and avoid buying the hype. Dividend investing is basically investing in companies who share part of their profits with you regularly. These payouts are known as dividends. So I believe most of us heard the term like, don't put all your eggs in one basket. So instead of diversifying over different products, we can diversify over strategies.
We all know dividend investing is good, but of course, there are pitfalls for us to that we need to avoid in this strategy. So many investors tend to stop picking the one with the highest dividend yield, but this is generally a big no in dividend investing. Why? Let us imagine even if you have received a high dividend income, but at the end of the day, you are still losing a big portion of your capital because of the stock price dropping, and if you were buying a stock with bad fundamental. So this is the pitfall we need to avoid. And another one, and we have to understand that paying dividends is not an obligation of the company. Companies in most of the industries can decide whether to pay dividends to their shareholders or retain their cash for business. So that's why it's important for us to understand the business to tackle both the pitfalls. Understanding the business itself is the main takeaway. And if you understand the company well, you will be more informed on whether things that are happening are actually going to help or harm the company. So you will make a better investment decision at the end of the day.
So usually what my Malaysian clients do is they change their ringgit to Singapore dollars, and then when they will fund in ringgit first, because if you don't have a bank in Singapore, you have to do this thing called the telegraphic transfer. But telegraphic transfer, there is a cost. The bank will charge you, but not for Philip, because Philip's bank to accept ringgit is actually Maybank Malaysia. But of course, on paper, it's still called telegraphic transfer. But if you have a Maybank in Malaysia, your funding in, there's no cost, there's no charges. You just fund in ringgit, and my clients will convert the ringgit to Sing dollars and start investing.
Yeah, that's what I like about using Poems as well. Because I mean, we are Malaysians, and you want to fund your account, you don't have to TT your money to Singapore. Because when you do that, bank will charge you quite a sum, right? Processing fees. So the transaction fee will at least I don't know how much exactly it is. I didn't do that because I do it for free using the Poems, which is you can fund the Malaysia Maybank account. So that means you do it now, you bank transfer, it costs you nothing, not even 10 cents. And then you get ringgit in your account, and then you exchange it to Singapore dollar, or you exchange it to US dollar to buy US stocks. Like for me, I exchange it to Singapore dollars to buy Singapore stocks. And then when you receive your dividend, which is paid in Singapore dollar, you don't have to convert it to other currency. You keep it in Singapore dollars in your account in Poems. If you want to invest for dividend, you shouldn't look at other places before you look at Singapore. I would say like Singapore is you can find the best dividend stocks in Singapore, period, right? That's what I'll say. So, and if you want to invest in Singapore, then Poems is a number one choice I will go with.